ASX 200, Hang Seng and Taiwan managing to hold on to the green.
Target or resistance, whatever you want to call it, is 24,300.
With total sales down 18%, domestic sales down 22%.
Quick commerce impacting the store edition of the company. So that is the highlight, and cautious commentary coming in from Citi.
There goes the bell, and red is the color. Not very, very deep red.
It's going to be a very, very, very good partnership that India will have with the US.
So the macroeconomic fundamentals seem to be in reasonably good shape, I would say.
And markets are selling off. We're at the low point of the day. The Nifty is at 2,400.
30% correction in the stock in the past 3 months appears overdone.
This MK initiating coverage on both PFC and RSE.
US court has assigned now all the cases in this matter to a single judge.
Quarter on quarter, we have been improving and doing better.
It's another session where the headline indices, all of them are in the red.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
That was the day so far. Hello and welcome to Closing Bell, live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Nigel, and after 2 days of gains, today there is a bit of profit booking, but the markets have moved in a pretty tight band. So in the second half of the trading session, we've kind of inched lower, and the recoveries have been sold into. But again, still facing resistance at the upper end of the trading band. For now, we're down about 150 points on the Nifty. The sensex is down close to about 300 points. Sectorally, IT is weak in trade. The Nifty IT index has a cut of more than 1.5%. Banks are under pressure. And the stocks which are doing well are the ones which have gotten beaten out of shape. We spoke about ONGC. That's down more than 35% from the highs. Tata Motors is another underperformer. So today's winners were last year's losers.
Well, that's right, Reema. On a day, but the market is down close to around 160 points, as you mentioned. The breadth of the market is in favor of the number of stocks advancing. So telling you that there are a few stocks out there that, are doing quite well in trade. If you just pull up two names, one is Reliance Industries, the other one is HDFC Bank. Now, Reliance Industries is trying to hold one end up, and it's holding on to the 1,200 rupee odd marks, and there is some signs of buying on that particular counter. So that, in fact, is still up close to 100%. The problem is the street is sensing something with regard to HDFC Bank. And if in case it's not a very weak showing for the past quarter, then that could be actually the leader from here on, from HDFC Banks, because the positioning yesterday as well as today is suggesting that maybe, in fact, the street is a little bit skittish on this. So for the next couple of trading sessions, HDFC Bank is likely to be the one that leads the way, gives some kind of direction, because Reliance Industries has entered a bit of a consolidation. I think it's finding support at lower levels. So let's see how this goes. Prashant, how are you reading it?
I mean, I was just looking at that flash at the bottom of the screen, guys. NSE, the IPO volume, etc. And I think it was in FTPs. Guess what the total amount of, I think there were some numbers we should have the flashback on. In UK, the total IPO volume in 2024 was £1 billion. 1 billion. I mean, we've had, I think, at least 10 companies raise that much, right? in 2000. And it's just incredible. I mean, some of those stats, which of course, we've achieved on the platform here. Of course, it's been a lot of global companies coming up with sort of listings here. But this has been really the market. Of course, I mean, the US IPO market has been closed for the last couple of years. And UK is minuscule. I mean, £1 billion basically. We've had, offer for sales and early exits of that size and more through the course of 2024. So just that little bit. Otherwise, I mean, the market, of course, no real recovery, nothing, as you guys said, 146 lower, but the broader market doing better. And I think that really is the silver lining out there.
I've got some numbers. 2024 was a landmark year for equity raised here in India. Indian companies, they raised close to 3.5 lakh crores, which is $41 billion.
So compare that to
in 2024.
Basically $1 billion.
Yeah, $1 billion. Correct.
In the UK.
438 issuances is what we saw last year, 2024.
Yeah. And I think it maybe, some of the what we're seeing, of course, is also related to the fact that some of the other markets, etc., has largely primary markets have been very adversarial, like in the US, like in the UK, and of course Europe, etc., has been going the other way as well. So, that's a bit, still recapping 24 even as we really look into 2025. Rima.
I just want to talk about a few stocks. Tata Motors, that's up close to about 4%. HDFC Bank is down 2.5%. And here there is a note which came from CLSA in the morning, their strategy note outlook for 2025. And to recap that, they say in an uncertain and risky global macro environment, along with near-term economic growth slowdown in India, in the face of elevated absolute and relative valuations, we see muted returns for Nifty in 2025. He say the underperformance of actual capex spending versus expectations and rising tailwinds for affordable consumption make them favor this sector, and they're raising staples to a big overweight. And they're skimming through large caps, which have fallen more than 20% from highs. And after doing that, they add Tata Motors, NTPC, Nestle, Britannia to their India-focused portfolio, while they've removed HDFC Bank and cut the overweight in banks. They're also overweight commodities and insurance and IT, discretionary industrials and healthcare. They're overweight commodities and insurance, IT, discretionary industrials and healthcare are their underweights. But this CLSA's model portfolio in a way has impacted the way stocks have moved, and some of these should come up for you on your screen. Once again, Tata Motors, Nestle, Britannia, these are the stocks that they're adding, and they've cut their holding in HDFC Bank, and that's down close to about 2.5% today. But how should you position yourself in the last hour of trade? Mitesh is now with us for a few closing strategies. Mitesh, would you continue with your long?
So, we've had some kind of positive bias in the last couple of sessions, and I think that's the idea, that you trade with the belief that this lower level, which is now, around 23,980 to about 23,955, I think will hold. So we've had some call option position on the index. As long as we're not breaking below that, I think we'll hold on to that. The chances that today's move is retracement to yesterday's rally, and if we're not breaking 23,955 and give and take 15-20 points, I think good chance that we'll see a recovery, a retest of 24,200, and beyond that even 24,450, 500. So the view is positive, though the market is negative today.
And stocks, Mitesh?
Yeah. So on the stock side, I have a buy call on, we've given a buy on a couple of auto names. I think Tata Motors gave a good rally today and has retraced a little bit off, but could head towards levels of around 815, 820. So that's a buy for me. Keep a stop below 775 here. So you'll get a decent risk reward equation. The other one is a buy on REC with a stop at about 528 for targets of 560.
Let's talk about ONGC. Mitesh, thank you for that. ONGC is the top Nifty gainer. Upasna is here with the key highlights from a Jefferies note. Upasna.
Well, Jefferies has reiterated a buy rating on the stock, but has cut the target price by 6% from 410 per share to 385 per share. But the brokerage says that the 30% correction in the stock in the past 3 months appears overdone, and the crude price volatility impact on earnings is limited to just about 2%, as 95% of the domestic crude production is capped at $75 earlier. Now, it is also added that the consolidated EPS of the company should benefit from improved earnings outlook of HPCL, and recent regulatory actions also bodes well for the company's improved profitability even going forward. Now, the key factor that is a trigger for the stock going forward is the company's likely ramp up in KG Basin production in the last quarter of FY25 or the start of FY26 that the street will be closely eyeing on, is what the brokerage has highlighted.
Thank you very much for that. Prakash is now joining us this Friday afternoon. Prakash, ONGC has had quite a bit of a fall, more than 30% from its recent peak levels. Crude is now at 75. Valuations are looking attractive. Is it a buy for 2025?
Good afternoon, Rima. It does make sense. For instance, the softness in crude and the weak GRMs did make things very difficult for all of these crude players. But there are a couple of optionalities that probably seem to be getting aligned in favor of ONGC at these levels of 260 odd. One is, the under recovery in the LPG side might kind of, get obviated, if not this quarter, in not December, maybe in the March end quarter. Things could kind of start turning around for the likes of HPCL. So, that could have a effect for ONGC as well. And the other thing is, globally, while there's a lot of noise around crude being soft and all of that, gas is something which is finding its way in terms of many more applications. And the kind of regulatory, disposition towards that is to favor more of usage for gas. So ONGC will benefit from that as well. There's some very good, reserves that they have. They could start kind of leveraging as they go forward. Not much of capex is lined up. It's fully capitalized in that sense. So it could kind of benefit. An optimal level could probably be about 300 plus is my sense. So that's where it could kind of come and consolidate. And then, of course, we'll see how events pan out in the rest of the year to make some judgment. But yes, it definitely looks like a very good pick at this point.
Okay, all right. Let's focus on city gas distribution companies. And Prakash, I'm going to come back to you for that. Now, the government has asked GAIL and ONGC to allocate LPG shrinkage to city gas distribution companies in a phased manner. Stocks, of course, are reacting. I think IGL more than MGL. Vivek is here with what this really means. Vivek, over to you.
Well, that's right. So what's actually happened is that there has been a circular that is dated December 31st, 2024. What is it that the circular is saying? The circular states that the government has asked GAIL as well as ONGC to allocate LPG shrinkage to CGDs in a phased manner. Now remember, out of the total 2.55 MMSCD, which is the units, 1.27 MMSCD or the units will be allocated to CGDs in Q3. What does this mean? This basically means that the government guidelines, the latest guidelines, actually restores close to a little over 20% of the total cut that the CGDs had witnessed in the months of October and November of 2024. So it's a material positive, especially when you're talking about all of the CGDs. The one that is impacted more, the one that benefits the highest, is actually IGL, and that particular stock is doing the best amongst the CGDs in trade today. Now, analysts actually say, remember, when APM gas allocation for transportation was reduced from 70% to 45%, a cut of almost 6 units. Now, almost 1.3, that is close to 20%, has been restored back to the CGDs for their purpose or for their consumption itself. And this particular move is positive, given the fact that CGDs that were expected or were required to take price hikes of close to 6 rupees per kg, and they've already taken close to 3. Now, that particular price hike is not necessitated to go ahead and protect the margin. Overall, a positive move coming in for the CGDs. It will be interesting and important to note whether this particular move goes beyond Q3 and whether they can recover some of the lost APM gas allocation. That will be even more positive for this city gas distribution company.
All right, Vivek, thank you very much for that. So this is good news. I mean, lesser gas for city gas distribution companies was one of the issues when stocks had sold off quite a bit at the margin. Perhaps this will help. We'll try and speak with some of these companies as well over the next couple of days to better understand how this will really help things. IGL, by the way, from late November levels of about 300 has moved up almost 150 rupees. It's stocks at about 450 rupees now. Prakash, any thoughts on the news flow and your view on the stocks here?
So, good afternoon, Prashant. So, in the first place, the downward reaction was a bit overdone for all these CGD players. And if you recall, we'd spoken about this when, there were a lot of apprehensions in terms of whether they'll be able to continue utilizing their huge capex over the last many years with lower levels of gas supply. But that supply side getting secure is definitely great news. But it will be a while before it starts translating into superior margins. And my sense is, it's too early to celebrate that at this point in time. But if you had to look at this segment, there's definitely, it's like the insurance play in India, the private sector insurance play. It continues to grow, albeit, different rates of growth at different phases. But CGD is something which is here to stay and get deeper. The best is to take a basket approach in my view. But of course, we could have more bottom-up views as well and allocations therefrom. But I would believe a basket approach to these top three plays makes a lot of sense given the different models and geographies that they cater to. But yes, it's definitely going to be good in the long term, not necessarily, buy them at this level and start expecting a linear up move from here on.
Okay, all right. Prakash, I wanted your view on NALCO, because that's the one that's underperforming both what the Nifty is doing and what the metal index is doing in today's trading session. Let's run you through a few pointers. The Alumina February futures, well, that traded rate is down by close to around 6 to around 7% in today's trading session. The key reason is there is increased supply of alumina, which is leading to normalcy of prices post the sharp run that we have seen all the way from around $550 per ton. It went to around $800 per ton plus. From there, it's seen some kind of stabilization. Now, the Q3 alumina prices, FOB Australia, if you look at it, on an average, it was roughly around $700 per ton, which means that it is up by close to around $150 per ton on a sequential basis. This is for the past quarter, that's Q3. The problem is now the prices have corrected close to around 30% from the peak, which is putting some pressure on the stock as well as making the market a little bit nervous, because earlier they were playing that theme that in all probability, alumina will be in a deficit for the next couple of quarters. Which are the stocks in focus? NALCO will be the one that is under pressure. Why is that? Because close to around 40% of their EBIT for the past quarter came in from the alumina segment. For Vedanta, though, it's positive because they have close to 40-50% of their total alumina requirement that comes in from captive sources, and the remaining they buy from the open market. So if in case prices fall, then in fact, they'll be a gainer because they'll be buying alumina, which is their raw material for their aluminium facility, at a bit of a discount in comparison to what they were buying in the earlier few quarters. Prakash, what's your take? NALCO danced all the way to around 255, 260. I recall, at around 215 we had spoken, and it gave a good run from there. But now it's back to the pavilion. What's your take?
So, Nigel, I was very sure you would ask me this today, especially when, Vedanta and the rest of them are doing better. But, NALCO has a very unique business model. And to be fair, this hike in alumina prices was more intermittent, more short term. I don't think it would be fair to expect it to last too long. There was, in fact, more logistics issues rather than, just demand issues that propel the prices all the way to $800. But at even $600, there is absolutely no reason why NALCO will not be able to scale up its output itself. And as you rightly said, whatever they lose out on a potential gain on alumina prices, they actually make up for in terms of the backwardly integrated units where they produce aluminum. So, give and take, whatever price changes are happening. And I think if you look at the Feb futures on alumina, it's primarily, something where the market's taking all the bets off the table, given the uncertainty from the US sanctions potentially that could come through. So once that is out of the way, you'll probably see a resumption of demand again come back, and maybe prices stabilizing in that 600, 700 zones, which is good for NALCO to actually outperform the broader market. So I still continue to believe it's a good entry point for those who missed out on the earlier round in November. And from here on, you could at least get about a 20-25% upside for the entire year if everything goes off the way we are anticipating, even with this reduction in alumina peak prices.
Okay, thank you very much for that, Prakash. A quick word on Hero MotoCorp. Numbers are still disappointing for two-wheelers, particularly on the domestic side, but stocks have fallen 30-33% from the recent peak levels. So at what point does the pessimism get overdone and stocks start looking attractive?
No, actually, you're right, Rima. What happens is the anticipation of improvement suddenly rubs off to everything just because one or two players have actually been off the races a bit earlier. So because PV entry-level cars started clocking some very decent numbers, only for that 1 month or 2 months, everybody got excited, and anticipation was that 370,000 motorbikes being sold in a month, which is a slightly difficult ask, given the fact that the rural economy is still not kind of seeing demand come back. There are indications that things would look up, but then you'll have to give it some time. Usually, the quarters that do well for them are, Jan, Feb, March, and effectively the festive season, which is close to September and December. So I think things will look up. The run-up has been fairly steep and too rapid, so that's where, there's some profit taking that's coming. But if you were to look at autos as a play, and if you were okay with two-wheelers, I think TVS and Hero definitely should feature it. Eicher and Bajaj have their own challenges in that sense to grow from where they are on the business side. But from a stock perspective, I think Hero still makes a lot of sense at lower levels, and you could kind of take it forward for the next full year.
Between Hero and Bajaj, Bajaj has outperformed Hero quite considerably. In fact, Hero's underperformed even TVS. So in the last 3 years, Bajaj Auto is up 175%, TVS Motors has gone up 300%, while a Hero MotoCorp is only up 70%. So Hero MotoCorp, has an underperformance which dates for almost 3 years now. Prakash, thank you for joining in and enjoy your weekend. We will get into a break. On the other side, we'll invite Vaibhav Sanghavi, CEO of ASK Head Solutions. Welcome back. Let's talk about Avenue Supermarts. It's trading at a 15% upper circuit following a strong business update for Q3. Vinny is here with the numbers. Vinny.
So yes, it's a good update that's come in from Avenue Supermart in Q3 FY25. They managed to see a 17% growth on a year-on-year basis in terms of the revenue, coming in at 15,565 crores. The number of stores they've added also have increased in terms of the pace of store expansion. That has increased. They've added 10 stores this quarter versus last quarter was around 6 stores. So the total number of stores they've added for 9-month FY25 are at 22 stores for the 9-month period, and total store count stands at around 387. Now, in terms of brokerage notes, also brokerage are quite positive on this one, especially in terms of what we have coming in for CLSA. They are maintaining an outperform rating, target price of 5,360 rupees. They said that the sales growth, the pace of growth, that has seen an increase versus last quarter, and the store growth, also the pickup in terms of store expansion, that has also seen a growth. So that is why they're positive on this stock. Moving on, we have Citi on the other side, who have actually maintained their sell rating, target price of 3,500 rupees per share. They're highlighting concerns coming in on adverse product mix, which could impact Avenue Supermart going forward as well. And in terms of competition for quick commerce, which is a concern. And other than that, the PE multiple for Avenue Supermart is quite high, so they're a bit cautious in terms for Avenue Supermart. Goldman Sachs also maintaining the sell rating, target price of 3,425 rupees. And they too are highlighting the concerns coming in the growth and expansion that we've seen of quick commerce players, which could impact Avenue Supermart. And lastly, Morgan Stanley too is underweight on Avenue Supermart, maintaining the target price of 3,702 rupees per share. And the concern that Morgan Stanley is highlighting is that the company has seen a 17% growth, but versus what it is normally seen, and historically its peak growth was around 20%, it's lower than that. So that is why they also are a bit cautious on the stock.
Okay, well, Vinny, the next one is ITC, and the shares down a little bit ahead of the hotel demerger. The record date is 6th of January. So tell us more.
Yes, absolutely. The record date for this demerger. So from 6th of Jan now, ITC hotels will be demerged and only ITC right now will be trading. Now the ITC hotels listing will happen around within 60 days from 16th of December. That's the date. So somewhere before the 15th of February, we could see the listing happening for ITC hotels. That will be interesting to watch out for. Now, obviously, we knew the transaction details in terms of what the shareholders will be getting, but further details have come in terms of the cash and cash equivalent part of around 1,500 crores will go to ITC hotels. Other than that, the properties that are and assets investments that are a part of ITC's hotel business will be transferred to the ITC hotels now, coming in from 6th of January. Only one thing that one should keep an eye out on is the financial investments that was in EIH as well as HLV. That will not be transferred to ITC Hotel because that's a financial investment that ITC has made. Now, just in terms of what is the valuation or the fair value going by, and this is coming in from SBI Securities, they've said that for FY25, the EV to EBITDA, the fair value is around 20 times, and the fair value for ITC Hotels would be 113 rupees would be the fair value for ITC Hotel stock. And at 25 times, it would be 141 rupees, 30 times it would be 170 rupees. So on an average, when you look at it for the hotel industry, the EV to EBITDA is somewhere around 25 times. So, you know, fair value on the basis of that at 25 times of EV to EBITDA would be 141 rupees. So we'll be surely keeping an eye out on this one. This is the fair value that SBI Securities has highlighted.
Okay, all right, Vinny, thank you very much for that. That's DMart and ITC. Let's bring in Vaibhav Sanghvi, CEO of ASK Hedge Solutions. Vaibhav, good to have you with us here. Before we get down to some sectors, etc., I was just thinking, last 2 months, if you think about it, the consensus was that large caps will do better and the time for the best for the mid and small cap part of the market is over. But actually, almost exactly the opposite has happened. You can take individual stocks and you may be able to support that thesis that indeed large caps have done better, mid caps and small caps have lost value. But at an index level, you look at small cap index or the mid cap index, they've hardly lost any value from the highs. They're off the highs, but nothing like what large cap stocks have done or the indices have done. Just your thoughts on that and whether, there are still people who believe maybe 25 is the year for large caps. Will that be so? Your thoughts?
To be very honest, Prashant, I think that's a story for the whole year, last year actually. I mean, when we came into 2024, the overwhelming consensus expectation was that, it is going to be a year for large caps, versus the mid cap. And at the end of it, it turned out to be that Nifty did close to about 8.8%, whereas mid and small cap were about 24-25%. So while it kind of keeps on, surprising all the analysts or all the kind of the whole community, investor community as such, but one important thing which I'll take from that is that, large cap performance is also largely due to the intermediate FPI flows, from an investment perspective. So whenever you see, and it's generally a trend or a pattern, that whenever you see steady inflows coming from foreign investors, is when you tend to, work around the large cap kind of basket. Unfortunately, in the last 3 months, we've seen consistent outflows, and purely because of which we've seen that kind of impact on the large caps in that sense. Going forward in 2025, I'll continue to maintain that till the time we see steady FPI inflow coming back, large cap will keep on oscillating within those kind of ranges.
Hi Vaibhav, good afternoon and good to see you in. Vaibhav, what are you making of the trends that are emerging on the economy? The GST collections were a little bit subdued, softer than expected. While you have some of these quarterly updates that are looking quite good. Today you have a few of these retailers, whether it's Avenue Supermart, V-Mart, V2 Retail, all of them, things are looking up. So what do you make of the state of the economy? Even the auto trends were very, very divergent.
No, of course, Nigel, I think last quarter we saw what the GDP number was. And this quarter, the expectation is while it would be weak, on a broad base, but from a quarter-on-quarter perspective, you might see some amount of improvement coming about. Now, whether that improvement is enough, my sense is basically lot more recovery has to happen, for the earnings story to resume back. Till that time, I think we'll continue to see some amount of downgrades in the earnings, and which is where I do think that the government will have to play a big and a major role, either via policy measures, reforms, and partly due to the upcoming budget, which is going to be extremely important. So while 2025, everybody says that we would be business as usual. My sense is basically 2 or 3 things have to be watched very, very carefully and are going to be very important variables. One, of course, is the government policies, reforms, and what is it that they are doing to kind of improving the economy. 2, from a US perspective, what are the Trump policies and the tariffs likely to be, and subsequently the interest rate scenario. So those are the 3 factors which I would say are going to be extremely important for 2025.
Weber, the Indian government policies have tilted more towards welfare schemes, at least in the last 6 to 12 months, while capex spending has taken a bit of a backseat. So do you think that, coupled with the continuation of a rural recovery, some of the large cap consumption names, where we've seen a reasonable stock price correction of 20-30%, that could be an attractive theme going into 2025? The likes of an HUL, Nestle, Britannia?
Rima, of course. I think one interesting trend which we are seeing is that post the general election, there is some amount of change in terms of the policy framework. While the center continues to be focused on, capex and in continuation with what they had done for the last 8 to 10 years in terms of the supply side, from a state perspective, I think there is a lot more increasing expenditure on the welfare side. Now, welfare in some ways is apt to kind of bridge that kind of gap. But that would definitely, in my view, I think kind of help consumption, not immediately, but at least it will take about a couple of quarters for things to kind of bottom out in that sense. So yes, after this correction, valuation looking to be reasonable. Consumer is a space we will be looking at, on any weaknesses. But mind it, I think this is something you will have to have some patience, while holding it.
Got that. Anything else, Weber, looks interesting from a tactical trading point of view, short term, where there is opportunity?
See, what we do think is basically from a tactical or probably medium term perspective is, a sector which is cement, building materials, is something which we do think that can kind of, come back into a little favor. The reason why we were subdued in the first half is purely because, of course, capex was a little low. But what we are seeing from a channel check perspective or on ground perspective is that there is some amount of buoyancy coming back in terms of the volumes. Of course, the raw material prices are pretty subdued. So from a margin perspective and a volume perspective, if things get back into place, along with the consolidation of that industry, my sense is basically that's a sector to kind of watch out. Of course, Rima did mention about consumers. That is something which we do like at declines. And also at declines is IT is a sector which we would constructively look at as well. Apart from the renewables, which is a structural theme which we have been talking for long now.
So cement, IT and renewables. These are the 3 sectors you're bullish. Any sectors to avoid?
One more addition to that is financial services, which we continue to like. What to avoid? My sense is basically till the time banking results are out, we see the NPA numbers. I would probably avoid that. In addition to that, global sectors like metals, mining, commodities. In the situation where the global growth is kind of weakening, that's a sector probably to avoid as well. So those are the sectors which you will stay away.
Tell us more about cement. Buy the big names or the smaller ones? The ones that are getting gobbled or the ones that are gobbling?
No, I think more importantly, I think from a regional perspective, I think northern or western kind of cement players where we've seen some good price consolidation, price kind of actually holding up, post increases, and also some amount of volume buoyancy is something which we can see. Those are the kind of players or any cement companies which are exposed to those areas are something which we can look for.
Okay, all right. We'll leave it there. Weber, good to speak with you. Thank you very much for joining us. It's a pleasure having you here on CNBC this Friday afternoon. Markets down 160. We'll take a quick commercial break here. We'll tell you what's happening and what's being talked about in dealing rooms. D Street Chatter with Nimesh coming up next, and of course with some trading ideas post that. Stay with us.
Welcome back. Well, the markets have actually moved to the low point of the day, but yet again that 24,000 mark got tested and it's been defended at least as of now. The Nifty Bank, that's the problem point. HDFC Bank's quarterly numbers are most important, the quarterly update that we'll get. And for the time being, it appears positioning is such that the street is a little bit nervous about what we're going to hear from them on that front, because that's moved to the low point of the day. That comes up for you on the screen. Nifty Bank breaks 51,000. Let's get HDFC Bank, the biggest weight out there. That is down 2.5%. Mitesh Thakkar is back with us. Mitesh, what's your take? Where are we headed? A revisit to 23,500 or a move to 24,500?
So, Nigel, I am still positively biased, so I hope that we don't revisit 23,500 soon. The idea is that, yes, we are down today, and significantly so, about, roughly about 0.75%. But two things. One, I think the two hourly charts, the averages are placed around 23,950 odd zone. So I think unless that zone is being taken out, I would still be hoping that this bounce back will play on the upside. And today looks like a retracement of yesterday's fall. So in that sense, the level to watch is 23,950, and when you can give and take 15-20 points. But the idea that we should not get a 2 hourly closing growth.
Okay, all right. Mitesh, any specific stocks in terms of trades?
So SBI card is something, which is on my radar. I think it's closing with good strength. So take a BTST here with a stop at about 717 and look for a target of 735 to begin with, maybe even higher levels. And the other one is Tata Consumer. That's a BTST with a stop at about 934 for targets of 950.
Thank you. Let's get to D Street Chatter. Nimesh is joining in to get us that insight. Nimesh.
Hi, Rima. A bit of a pullback after what we saw, a sharp recovery in yesterday's trade, and rightly so, because the global data still seems to be quite muted as well. So that's going to have an impact on the Indian markets as well. I guess while the flows have resumed, the full participation seems to be still missing out. So the volumes are still thin from large institutions. The sector of the week was clearly the PSU index. I've been saying for the last couple of days that there is buying interest from larger institutions in the PSU stocks. The index this week has gained, the CPS index, I'm saying, has gained nearly 3.5%. And a lot of individual names within the PSU stocks have actually rallied pretty hard this week. So it looks like that momentum is likely to continue in the PSU index. Even the broader markets have relatively outperformed today, and the breadth seems to be quite positive as well. I guess the big trigger to watch will be the quarterly updates across the board. We saw what happened to Avenue Supermart today. On a slightly better update, you saw a big 10%, more than 10% up move in that name. So the quarterly updates will be important. But I guess the full participation from institutions and the country allocations should start early next week.
Okay, all right, got that, Nimesh. What about individual stocks, though? What are you picking up?
Well, so the first name is Shelley Engineering. That stock is buzzing in trade today, but almost at 52-week highs. The volumes have picked up as well. I understand there's going to be another large block in Shelley Engineering very soon. Likely the domestic mutual fund is a seller, and a leading long-only fund who bought recently in the block as well. They are likely to buy further stake in Shelley Engineering. So that's the first name. The second stock, a couple of names where there is delivery-based buying, CG Power and Indus Towers. Both the stocks for the second day running, there is institutional buying at FID. So expect high delivery volumes there on the buy side in both those names. The third stock is Geo Finance. We saw a large block in yesterday's trade as well. Even today, there are sell flows, is what I understand. A leading long-only fund is an aggressive seller in the last couple of days, but equally, it's been matched by aggressive domestic buying. So even yesterday, the entire large block got absorbed by domestic mutual funds, and that's been the case in today's market as well. And the last is Linda India. If you just look at the last 3-4 months chart, it is sharply corrected from all the way high of almost 10,000 to the low of 5,800, 1,500. And from there, you have seen a bit of a pullback as well in the last couple of days. I understand some large HNI investors were sellers. That's completely sold out now. So the supply overhang seems to be largely over. And hence, you've seen a bit of a recovery from the recent lows in Linda India.
Thank you very much for that. Himang Jani is now with us on the show. Himang, afternoon. Now, Avenue Supermarts was an underperformer through last year as the rise of quick commerce was unfolding. But the Q3 numbers, at least the update given on the top line, the same-store sales growth is very, very optimistic, very strong. Would you read too much into it? Do you think it's turning the corner? Because year-to-date, the stock, not year-to-date, in the last 1 year, the stock is only up 1%. So it's underperformed.
Yes, good afternoon, Rima, and thanks for having me on the show. So clearly, DMart, today's move is a big surprise for the fact that, people were not expecting such a strong top-line performance, almost about 17.5%, along with the store addition of about 10 odd. And we think that while there has been a big surprise over there, we should wait for more clarity once the quarterly numbers are out, and more importantly, how the margins are panning out. We have to remember that the disruption or the competitive intensity is not going away in a hurry with the way quick commerce has expanded, the way they have raised funds. So I think it might be just a temporary sort of a pullback that one is really witnessing in DMart. And surely we would not be comfortable buying into it at such a high levels.
Okay, all right. Just pull up Zomato. There's some large trades that are taking place on Zomato. I think we should pull up, the chart out there. Big volume spike is what we're seeing. Explains why the stock has moved to the low point of the day. Some big change of hands. We'll try to get you the exact number with regard to that large trade. Hi, Hemang. Good afternoon. Good to see you, Ben. What's your pick? Zomato or Swiggy? I was reading an Anand Rathi wrote today, and they seem to be reasonably positive on both of them. What's your take?
So, Nigel, while people are very positive on this theme and more so on both Swiggy and Zomato, I do think that there is a case for some sort of a disappointment when it comes to quarterly numbers, particularly from Zomato. And it's also at a premium valuation. And most of the positives that one can possibly think of in terms of the increase in weight or inclusion in Nifty, all those things have already played out. So not too comfortable buying into it at this point, while the theme remains good. If at all I have to buy, I would surely, look at Swiggy, which still offers a much, better valuation or a much better gap vis-a-vis Zomato. So, selectively one can look at buying into Swiggy.
Look at something like a small name, a relatively small, Shakti Pumps. It's up about 4% today. And for the year now, how can it be? We only traded for how many days? Actually, we've traded 3 days now, right? It's up 14%, 15% for the year. When I say year, I mean 2025. Just quite something. The interesting thing about this is that there's a company called Oswald Pumps, which is actually the leader in the solar pumps manufacturing space, which is coming up with an IPO. And I think the IPO opening is nearby. I'm not sure if there's interest in Shakti because of that, some valuation differentials, etc. I don't know what that is coming to the market at, but it's a fairly decent sized IPO. And of course, it's a much larger peer to Shakti. The Kusum scheme from the government is, of course, a tailwind for both because government is the largest in terms of providing subsidy for these solar pumps. Government is the big one, which has been able to move things. So this one continues to do well. Any thoughts, Hemang, if you track this one?
It's been one of the best performing stocks in the mid caps over the last 1 year. And even while the mid cap sector has gone through some sort of a correction, I think the stock has remained quite steady. I think, when you look at the order book of the company, as far as this solar pumps are concerned, it remains very high and there is a massive capex that the company has undertaken. And if you look at the quarterly results last almost 3 quarters, there has been almost 100% kind of a growth. So from that perspective, it does look interesting, but I feel that, it would not be good to chase this theme because it has already played out quite a lot. And we should see how the margins picture pans out this quarter because it's been reporting about 24% kind of operating profit margin. So we have to see how it pans out.
Any other stocks that look attractive to you at these levels?
So Rima, I think discretionary consumption space still looks good. So something like Jubilant Food, Sapphire, some of the jewelry companies, Titan has seen a very smart rebound in the last few days. And I do think that this quarter, the update is going to be very good, because of the wedding season and general, spending patterns that we have seen. So I think these are some of the pockets where you can expect strong quarterly updates and some of the stocks have corrected in the last, let's say, about 2 or 3 months. So it does provide a good entry point.
Okay, all right. What about this bounce that we're seeing in crude oil prices, Hemang? That's what's led ONGC as well as Oil India higher. ONGC is the biggest gainer this week, up 10%. So it started off in style. Any view on either of these two names?
So Nigel, from a PSU basket perspective, we are seeing some pullback in some of the oil and gas names, like you mentioned, ONGC, Oil India. Also, some of the power financiers are seeing a bit of a rebound, REC, PFC, partly because of the quarterly update, partly because some of the stocks have corrected quite a lot. But I think, PSU as a theme to me looks, stretched, while people may say that the stocks have corrected. Fundamentally, I don't see any great merit in buying into any of these stocks. And you see the way the regulator is also, coming out with very weird kind of news flow when you look at this Petronet, some of the, city gas distribution companies like IGL, one day they say that 20% cut and then there is some reallocation. So it's becoming far more difficult to gauge what kind of numbers these companies will, put out. So not trying to buy into any of these names at this point.
Sorry, Hemang, just stay on. We need to slip into a very short break.
But two other names I want to just highlight, sorry. Yeah. One is a name called Apollo Microsystems, if you can have this up. I'm not sure what's happening here. But basically in the last 5 days, it's moved 40%. I'm just reading. It's a company which is involved in design, development, assembly and testing of electronic and electromechanical solutions. I'm not sure, I don't think we've ever discussed this one on the channel, but that's what it is coming up at almost at about 400 crores in revenues in F5 24. So 300 crores in 23, 400 crores in FY 24. And of course, I think it had made a profit of about 30 crores or so last year. But big jump in this one. And Nigel, this entire Lloyds, I think you've covered this earlier. Lloyds, I think engineering is up sharply. There's Lloyds Metals and Energy up 8%. That entire group, there are a bunch of companies which are listed, 3-4 companies. They're all up between 5, 6, 7%.
Yeah, so basically Lloyds, a month or so ago, you have one of the promoters who, helped in turning around the companies. You have the Guptas and you have the other logistic player. So he's the one that went ahead and managed to resolve a lot of issues with regard to mining in that belt, which is the iron ore belt here in Maharashtra. And what happened was they did a bit of a restructuring. That is, they did a corporate structure where in fact there'll be a one-time payment that will go out, but otherwise it'll help the operating efficiency. The stock reacted okay positively. The reason that we're seeing such a big move is because Maharashtra's chief minister had visited the site and he was talking about Lloyd Metals. And also he was briefly alluded to the stock moving up multiple times in the coming year, coming few years. Mr.
Stock moving up?
Yeah. Mr. Fadnavis, that it's potential, so that's the translation that it's around 3 days
Not
old.
the promoter, the chief minister.
Chief minister, yes,
okay.
because that's the big mining belt. So he said there is a potential that the company could do very, very well. And he briefly mentioned about a stock price move. So it's got excited. That's sort of a market, right?
So I think they're all the same, right? Lloyds Energy Engineering Works, Metals and Energy, and there's Lloyds Enterprises also.
Yes.
They're all up between 5 and 10, 12%.
The big mover has been Lloyds Metals because that's the big one, and then I think in this week itself it's moved from around 1,200 rupees to around that 1,450 rupee mark. Big move is what we're seeing on that one. And this is a stock that in 2020 I think it was $100.
Yeah.
Or a little less than that.
Yeah.
And the other one, if you want to look at, will be Sunflag, because Sunflag has a stake in Lloyds Metals. And that is running on the hope that maybe at some point of time there will be some pairing of the stake that they have, because the stake that they have, I think, is as good as what their market cap is. So that's why that one as well is up close to around 5%.
250 to 290 in 3 days. Sunflag Iron and Steel as well. So yeah, I mean, there is stuff moving. You just have to look, under the surface. And that's one bunch which is moving, as we explained. Just playing out that sound bites for you. Hemang, of course, is with us, and we'll go back to Hemang on this bunch as well in a bit. But Mark Mobius spoke with us earlier. He's chairman at Mobius Emerging Opportunities Fund. He remains optimistic on India, looking for companies here in a variety of sectors. Listen.
I think going forward, you're going to see a very good market in India. And India, I believe, is going to benefit from the Trump administration simply because, first of all, the Trump administration will not favor the Chinese market. And if you look at the global picture, where else can investors go overseas? Where are the best places? And India comes up all the time because of the incredible growth of the country, because of the reforms that are taking place under the current government, and simply because there's so much value in the market, companies with very high return on capital, etc. So I'm continuing to be optimistic about India generally. Well, first of all, I would look at export-oriented companies to begin with because of the currency situation, and also simply because India is gradually becoming more and more competitive against the Chinese export. But those companies that are exporting, let's say Infosys that exports a lot of software, they are going to become more competitive because of the weakening rupee. So I think you've got to look at many of these stocks that have a US dollar income component will continue to do very, very good. Trump is going to lower taxes. Secondly, he's going to cut out a lot of the bureaucracy and a lot of the paperwork, a lot of the impediments to doing business in America. This is going to be very, very good, not only for American industry, but for foreign industries. Because you must remember, if you cut out a lot of this bureaucracy, it'll be easier for Indian companies to do business in America. But I believe that going forward, what I want to look at is companies that have an orientation towards the semiconductor industry. Unfortunately, we have not yet been able to isolate such companies, but we're going to look at those very carefully because I believe India is going to become a big competitor in not only low-end IT and low-end computer chips, but high-end as well. So I believe that's one sector that I want to look at more carefully.
Welcome back. Well, keep an eye out on EPL Limited. You know, my colleague Ashwin Mohan, he in fact is picking up from sources that the promoter entity could be looking at exiting that company. You know, and they've appointed an advisor as well. So explains why there is some excitement. Now that we'll get him so that he can give us further details on that one. Well, Hemang Jani is still with us. Hemang, the markets actually have moved to the low point of the day. I wanted your view on a couple of stocks. You know, you have select names like a BSE. That's down close to around 2.5%. Angel One as well has come down close to around 4%. We know these stocks actually have been in buy on dips mode in the second half of last year because we had periodic corrections and then the stocks bounced back. Any view on them? Anything you like from the stock market related plays?
So Nigel, as far as discount brokerage firms are concerned or any other companies for that matter where the large contribution is coming from the brokerage business, I think we must understand that last few months, both cash market and derivative volumes have actually taken a big knock, partly because of the way the expiry mechanisms have changed. And there is a sense that it will take, at least 2 quarters for any sort of a clarity or visibility to emerge as to, whether there's going to be any growth or no. So some of these discount brokerage companies, let's say Angel One derives almost 80% of their revenue from the options business. So I definitely think that there is going to be a massive de-rating. Let's wait out for the numbers. But I do think that there is a case for a significant cut over there. But as far as BSE is concerned, the interesting aspect is that while the volumes have come down, the derivative volume, but the premium, volumes have not gone down as much and their margins have improved. So I think people are slightly more positive when it comes to BSE, and there is going to be a significant market share gains as well because, you have only 2 major players on the weekly expiry. So BSE, the view remains relatively positive, but I would be more comfortable buying into any small dip over there.
Okay, so that's the view on BSE. You know, we were talking about all these Lloyds Group companies. Do you track any of them, Hemang?
Not the Lloyds Group companies, but I had a look at this Apollo Microsystem, Prashant, and interestingly, they have actually invested quite heavily into this defense-related capex, and they have taken a big space. And recently, the management also has given out a very strong guidance of almost about doubling their turnover in the next 3 years. And they are sitting on a big order book at this point of time, almost about 6 billion rupees. It's a very small company, Prashant, about 4,000 crore kind of a market cap, but these days, any bottom-up kind of a guy, when he looks at such companies where you see very strong guidance and all, and if 1 or 2 big investors kind of get into it, typically stock tends to move up. So I think in the last 1 month, the stock has gone up quite a lot.
I think IDFC First Bank, the total business is up by close to 25% on a year-on-year basis. That's the Q3 operational update that they have come up with. And for the time being, the stock has moved to the high point of the day, waiting to hear something more with regard to what's come out there. But for the time being, I think the initial number looks pretty okay. Hemang, your view? IDFC First Bank, the quarterly business update will get you further details on that. But anything else? Where does it come in the list of banks that you like?
So Nigel, I think from the retail banks, any banks which has a high exposure to microfinance or unsecured kind of lending, the numbers may not be good. It's a different story that some of the stocks have already corrected. But I think we should watch out for, the numbers and management commentary on, some of these microfinance related activities. So IndusInd Bank, IDFC First, I would watch out for some more clarity within the banks. I think PSU banks are better placed. You can expect about 35-36% kind of a growth when it comes to earnings. So BOB, maybe, PNB, these are some of the names which are better placed as far as this quarterly numbers are concerned.
Got that, Hemang. I think we're now down 200 points. So 23,984 is where we are at. Of course, I mean, we still, of course, yesterday was, of course, a much bigger move. We started the previous day close. Wednesday's close was 23,740, and we left off at about 24,188. But the high yesterday was about 24,226. So some give back, and basically yesterday's sort of candle cut in half with the cut that we've seen today. But otherwise, not very much. For the week, I think the Nifty will be up about 0.75% or so. And I think the Nifty Bank should also be up. Okay, Nifty Bank will be down about 0.6, 0.7%, largely flat. So second week in a row, not very much at all coming through. Hemang, we'll say thank you. Appreciate your time here on CNBC TV18, and see you soon and talk to you soon again. So those are changes which are coming up and how we are leaving off and signing off in that sense. Broader market, much better. But of course, the gap there also closed. About 1,450 stocks on the NSE higher and about 1,350 stocks lower. So about 100 stocks separated numerically what was up and what the number of stocks which are up and down. DMart, sort of big gainer today, 11%. ITI was locked up, limit up actually, 20% on ITI, and has done very well since basically I think middle of December, early December has done phenomenally well. I mean, I think from 250 to 450 in a month or so on ITI Limited. DMart I mentioned, ONGC 5%, Saregama was a big move, 11.5%. There's Apollo Microsystems, which we were discussing, 11%. And the only reason it came up to my notice is because of the volumes. I mean, I think it's the 5th largest volume traded stock today on the NSE. So very large volumes there. And the entire Lloyds Group stock, again, very heavy volumes here as well. And of course, ITDC and Just Dial and a few others also participating with decent sized volumes. Style Bazaar is another one with about a 7.5% pop. Nigel.
Well, that's right. A few more notable losers in today's trading session. You had Dynamatic Technologies. That stock was down close to around 5% in today's trading session. You had Sterling Tools as well that fell on rather large volumes. That was lower in trade. NALCO, as we told you. Alumina story is going wrong. There's been a big correction from the recent peak, so that's why that was under pressure. Tanla Platforms lower in trade. Zomato, large trade seen out there, stock lower in today's trading session. So we ended off the week on a weakish note. For the week, we did see that the Nifty actually went home with some gains. The biggest loser this week actually was the Realty Index that pulled back a goodish bit. The biggest gainer was the CPSE, the PSE related stocks. So that index was the biggest gainer. I'll tell you what, we'll wrap up on this edition of Closing Bell. Don't go anywhere. Editor's Roundtable is waiting for you on the other side.